Uriel O says, "Hi, Austin and Robert. My name is Uriel, and I have been listening to your podcast for the last 2 years. Thank you so much for listening, Uriel. You all have been crucial and key to my financial outlook, and I cannot express my gratitude enough. I wanted to reach out because my wife and I are in a season where we wanted to choose the optimal route for our next investment. We have our 3 months of emergency funds set aside. We do the up to the match with our 401k. We max out our Roth IRAs. We've got some money in a bridge account, so we're doing everything right. But the situation here is that we currently own a duplex and we rent out the other side. It cash flows about $1,500 a month, and my wife and I are interested in buying another duplex in the next 3 years or so we could keep our current duplex and then rent out both units, and now we'd have 3 units making us money. Now my question is this: should we put the surplus money that we're saving for a down payment in a high yield savings account, or put it in the stock market and weather the volatility and tax implications? Robert, I'll let you kick this one off.
This is a great question, and I'm really happy that you thought through this part of it, because a lot of times when people are saving for a down payment on a property, they'll just let it sit in a checking account because it's earmarked for that property. Huge mistake. You, at the very minimum, want to have it in the high yield savings on public.com or in the stock market. Here's how I would make that distinction. I would say if this property is on your list to buy in 3 years, I would get the money invested into some of the low-cost ETFs we talk about, because volatility will come into play, but you'll have enough time for it to work itself out. Now, if you're going to buy this property in a year or less, I would keep it in a high yield savings account so it's there and it's ready, and no short-term volatility is going to play around with your money and have a negative impact on your ability to purchase this next property. And then, not part of the question, but I want to talk about it just for a second, is also make sure you explore all the best options for how to finance this property, because in most instances, especially because it's going to cash flow, you want to keep as much of your cash to yourself invested in the markets, in crypto and other things, rather than burying yourself in the property. So make sure you explore what is the best mortgage type for that purchase at that time.
I think that's a great breakdown and some great advice. In my opinion, my general rule of thumb is if the purchase you're saving for is 18 to 24 months away, it's probably too close to try and time the market with, oh, it's in 18 months, I got to have this money. We all saw what happened in April because of the Trump tariff tantrum. Before that, we saw what happened with the yen carry trade in, I think it was August of 24, right? The markets can move up and down by 10, 15, 20% in a very short period of time. Now, they, of course, always bounce back over a long period of time, but you don't want to get caught in one of those moves and, oh, my $50,000 down payment is now only $38,000 because the market's messed up, right? So I guess what I'm trying to say here is, if I were in your shoes, I would probably keep the money invested for 12, 18 months. And then after that, I'd start to slowly peel it off. If you've got some profits, pay some taxes on your profits. That's no problem. And then make sure that your money's ready to be deployed into this down payment for this awesome duplex that you want to buy. That's so exciting. You guys are going to have up to 3 units now earning awesome money. Cash flow of $1,500 a month on your existing duplex. You guys are rock stars. $18,000 a year in cash flow, Robert. How cool is that?
Very, very cool. And, we talk about real estate a lot because I think everyone should own real estate in their portfolio. But it's not just about cash flow. It's about capital appreciation. It's about tax benefits. It's about write-offs. There are a lot of advantages to owning real estate, and these guys are crushing it. And I love these kind of questions because I feel like they've got a plan, they're sticking with the plan, and they're executing the plan. And that just makes life so much better when you can wake up and then down the road, you're in your 30s, 40s, 50s, 60s, you're all set and you're not waking up with anxiety over money. That is one of the best feelings on earth.